Are there any signs of a slowdown in Denver's hot sellers market? Hey everybody, it's Alyson Wahl with Live South Denver, your real estate strategist and realtor for the South Denver area. So we are in the full swing of summer now. The rains are gone, the heat is here. Are there any signs of change in the market? Let's see what the data shows we've been up to. May delivered about 5,300 closings. This was up 60% from last year, but really that's no surprise because in May of 2020, we were knee deep in lockdown and quarantine nationwide, which meant there was just not nearly as much activity going on as we're used to year over year. If we compare that 5,300 closings to 2 years ago, though, we're actually down about 7%. Under contracts, how many homes went under contract in May? That was up 6.5% to 6,400 roughly. But more importantly, that was an increase of almost 14% from 2 years ago. This is actually the largest number of under contracts that we've seen in the Denver market in 5 years. Okay, so with all of those homes going under contract, how many new listings were hitting the market? There were 6,145 new listings in May, and that was 8% fewer than a year ago. That actually surprised me, that we have fewer this year than last year in the middle of lockdown and quarantine. But the part that is sad is that this number is 24% less than 2 years ago. This really gives us clues and insights into why our market is still so tight and so intense for buyers. That 6,100 new listings is the second lowest we've seen in 10 years. So we closed out May with about 2,800 homes for sale, giving us 15 days of inventory. I have to tell you, this was actually an increase over both March and April, where we were hovering around 9 to 11 days of inventory, but it's still down 64% from 2 years ago. The average days on market for May was 11 days, and the median days on market was 4. This hasn't changed in 3 months or more. When it comes to home prices, the average list price to sold price ratio just keeps going up, pointing to those intense bidding wars. In May, that list price to sold price ratio hit 105.1% for all homes. For single family homes, it hit 105.8%, and for condos and townhomes, it hit 103.5%. All through May, it has still been the Hunger Games for buyers, that's for sure. The average closed price for all homes in the market was $615,000 in May. That's a 26% increase from last year when we were in the heart of lockdown and quarantine, but it's still a 24% increase from 2 years ago. That $615,000 average is more than a $120,000 increase over 2 years ago. If we break it down by segment, single family home prices increased 27% over the last 2 years, and condos and townhomes have increased 18% over the last 2 years. Now, we know that averages can skew high if we're selling a lot more high-end properties, and with these bidding wars, we see homes that started out at the $900,000 price point tipping over into $1 million, and there has been a lot more traction with cash buyers coming in and buying $2 million and $3 million homes. So we know that the high-end price point's not struggling. So what is the median price point in our market right now? The median closed price for all homes is now well over $500,000. It's hit $535,000, and that's 26% more than it was 2 years ago. The question I hear multiple times a week: can this market continue? You mean with multiple offers on our low inventory, with buyers bringing loads of cash to cover appraisal gaps, or making cash offers so there is no appraisal and no loan contingency? Well, I don't think it'll last indefinitely. I will say I don't think it's going to change in the next couple of months. Here are some signs of change that I do see. 1, rates are starting to creep upwards. Yes, they bounce around, and it depends on the time of day and the day of the week that you lock them in. And most of my clients are still getting rates in the 3s and sometimes below 3%. These are amazing rates, and that is keeping the market moving forward at such an intense pace. But there is a slight trend upward. And as we approach 4%, as we pass 4%, at whatever point in time that happens, we're going to see blips in the market and possible slowdowns. I think people will regroup and come back in the market full force as they kind of wrap their mind around the fact that 4 and 5% are still very low interest rates over the course of history. Number 2, we actually have a decent amount of inventory right now for the season we're in. I know, right? I said we ended the month of May with 15 days of inventory, but given that we've been down at 7, 8, 9 days of inventory, I see my buyers saying, I don't need to rush to that house. I don't love it enough. I'm gonna wait. Oh, there'll be more houses next weekend. So that feeling of choice and selection is bringing a sense of freedom. So that means there is enough on the market that people aren't clamoring to buy just any home. Number 3, over the last 2 weeks since Memorial Day weekend, I have definitely seen some shifts in activity. I'm seeing fewer showings on homes, even great homes. There's not as much of a tension to get in and get a showing appointment. There's usually some availability. And even on these beautiful homes, there aren't as many offers. Instead of there being, say, 10 to 20 or more, we're seeing 2 to 5 or 7. And it's still a very competitive situation, but that's drastically different. When you're competing against 20 offers, the odds are there's someone with cash who's just going to take the day. When there are 2 or 5, you have a much better chance of playing the game. The one thing that hasn't changed with these fewer showings and fewer offers is how aggressive the offers are. They're still very, very strong as buyers are wanting to win these homes. It's going to take some time for this trend to continue before buyers may back off on their offers and soften these overbids and soften these appraisal gaps. And the last reason I think that we may see this craze in the market soften over time is the mad rush for remote work thanks to COVID is waning. Companies have now either made this the norm or not. A lot of people have already made the decision, made the jump, made the change, or their company has decided to extend this policy indefinitely, or they haven't. And people were waiting to see which way it would go for their company that they're not willing to leave, or they're going to make a change and come be where they want to be. But the fast pace of change is slowing. We're seeing a slow trickle, not the flood that we saw in the last 12 months. There's one more aspect to this question about, can the market continue like this? And it's related to price change and equity growth. This last year has been both an encouragement and a discouragement to buyers. Some see this market and think, I'll just buy a starter home and in 2 years, the price is gonna skyrocket. I can sell this house and go buy a house of my dreams. This is awesome. Other buyers see this market and think, I'm barely gonna get a house, and the house I really want will be out of my reach by the time I sell this one, and I'm feeling hopeless. I think both perspectives are on the extremes, so let's look at what the market data says about our trajectory for home price increase over time. So our average closed price for single-family homes over the last 3 years had been very stable. We were looking at average prices of $525 and then $545, and then we actually dropped down to $533, and then COVID hit and everything exploded, and now our average price is up in the 600s. But when we pull back and look at average appreciation since 2018, prices are up 31.8% and an average of 9.6 a year. The story for median prices is very similar. We were at $448. Then $463, then $468. Then the median price exploded to $535. But since 2018, prices have risen 31.5% with an average appreciation of 9.5% a year. Given this banner year that we've been having, 9.5% isn't too off the mark, considering that over time, Denver's annual average appreciation is 6.5%. So if we can keep all those numbers in perspective, I think the place we are right now is not too scary. Even though it's extending into a year and a little beyond, we really don't see this continuing on and on and on. We don't see a crash either. But I think in the big picture, we're going to see a strong blip upwards and then continue on with this average appreciation that's manageable for people wanting to enter the market and then wanting to sell and be able to move up down the road. As always, thank you so much for letting me be able to share with you a little bit about the Denver market and where we are right now. If you want to chat more, you know I'm always happy to. Feel free to call, text, or email, whatever works for you. Hey, I will see y'all next week.